Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 27th of September. Right, now let's just have a look where the market is, and then I'll start to recap what the real focus will be this week. Have a look through the major economic data releases, etc. Now, just up US Treasury yields, just finishing off from last week, they've gone through the roof, right? I'm surprised the dollar hasn't really taken off across the board. Today, the prices are up, so the yields have sort of probably eased back a bit. But you know what? It's a little bit of an odd one because that's such an aggressive move on the Treasury yields. You'd think the dollar would just start to rally aggressively, but it's not really doing so just yet. US equity futures up a little bit, right? That probably matches up with the yields just coming off slightly today. So I'm still trying to work out what's going on. And it's like everything's in the balance. But you know what? All things being equal, the US bond yields are higher. Interest rates, the prospects for higher rates in the US are better. So I don't actually understand exactly what's going on. So let's just have a look where the major pairs are. Now, Euro did a lot of work around 117.40. Got down to 117 to figure, and it's just been grinding. This is a tough move. As I said, with that move in the US Treasury yields, you'd think it would be a little bit more aggressive on the downside, but it's taking its time to get going. But look at this work up here around 117.40 on that resistance trend line. Tells me there's lots of selling on any sort of rallies at this point on Euro. Its buddies, right? Sterling, okay, that squeeze the top side. Same with Aussie and Kiwi. Kiwi's been a bit all over the place. Now this Evergrande, this Chinese Evergrande group, you know, real estate group, and they're into a whole heap of other things, that the fear around that has receded, right? So the yen has given up all its gains from the initial sell-off on dollars, you know, buy yen, safe haven trade. That's been sort of unwound. We are starting to see oil really dominating the direction of the dollar CAD to the downside. And, but just having a look down here at the bottom again, I mean, I still like Euro lower, but this is a bit of a concern. The Aussie, Sterling, and Kiwi, for that matter, just grinding sideways. Now, just on the Kiwi, the recent lockdowns have really put a kibosh on the RBNZ potential rate hike. I can't see them raising rates this year, right? That's how hard the economy's been hit with this last set of lockdowns. They were set to raise rates. I'd say that's going to be rolled back to January, February next year. So that's a bit of a negative for the Kiwi. Now, the Aussie and Sterling, they just don't want to play the strong dollar game at the moment, right? We're seeing moments of weak dollar and strong dollar, and it's really not that comforting to see these things trading sideways in a bigger range. The only real thing I like still is Euro, right? It's still got good shape. Of course, it's doing a lot of work around these resistance lines. The fact is, the only concern for me is it's not falling as those US Treasury yields are rallying, right? So something to keep an eye on. The dollar index continues to sort of grind higher. Dollar Swiss, even though it's been moving sideways, still in that sort of upward movement as well. And dollar CAD down. So the dollar pairs, right? You can almost say dollar Swiss sideways, dollar yen up, dollar CAD down. The dollar is doing different things across the board here, and that's of some concern because you like to see uniformity with the movements in the dollar, and it's not exactly playing the game. You know, Euro low, as I said, Sterling sideways, Aussie and Kiwi. Now, what's going on? Well, let me tell you, it's the last week of the month, and the last week of the month is notorious for where momentum starts to dwindle, right? You got the non-farm payroll CPI in the first 2 weeks. You have that really strong momentum, some of the central bank releases as well. Come the last week, it gets very loose. And this is where you usually find a whole bunch of central bankers speaking, and this week's no different. Now, keep your eyes on your fries here. The German federal election this weekend just gone. We'll hopefully get some insight into there, see if there's any major changes to the structure of the German government and what that may mean for policy, right? Now, if you're having a look through here and you got Kuroda speaking there, BOJ, the ECB President Lagarde speaking, FOMC member Evans speaks, Williams on a couple of occasions, Brainard, you've got, there's more of these, Fed Chairman Powell testifying, Evans. This is notorious. The last week of the month, it's like there's Bailey, Bank of England governor there as well. All the central bankers come out. They try and keep the market interested and focused on what's coming up. And, you know, I've always sort of said this, the last week of the month, the momentum of the currencies can get a little bit skew if. Once again, you've got Powell testifying up there. You've got Lagarde speaking down here. Bank of England Governor Bailey, Kuroda, Powell again. And there's a few others on Thursday, Friday, right? So this is just littered with, you know, it's going to be ambiguous comments. The key things for me to be watching out for, where we may get some sort of direction just for this week, right, as we wait for the non-farm payrolls the following week, US durable goods, right? That's a good historical number. You can't deny that these FOMC members who are speaking, they are going to come into play. Aussie retail sales, potential for the Australasian session there on Tuesday. Then you scroll down, as I said, you're looking for some of the high impacting stuff. And some of these are obviously the central bank, the heads of the central bank speaking, right? They can be obviously ambiguous speeches with Q&As afterwards. Very tough to gauge an immediate trend or trade on those events, right? And as you come down through Thursday, it doesn't get any easier. They're wheeling these old cronies out. Right, you got the Bostic, Evans, the FOMC dudes there. Kuroda's tentatively speaking up top there, and I think there's a few more on Friday. Got a bank holiday in China come Friday as well. But all I'm doing is searching through, looking for those key potential releases that may give us some shift in momentum. The Canadian GDP numbers and the US PCE price index. Good inflation number there. That's probably something to keep a close eye on as we go through the week. We get that done. And the ISM manufacturing numbers there as well. So like this week is a little bit troublesome in the sense that we've got a whole heap of dribble going to come out of the central bankers. We don't have any really major top tier data until Friday. So this is going to be a tricky one to piece together. What you're going to be looking for, right? And I'm sort of looking at the US Treasuries. I'm not getting huge amount of aggressive moves here. So the focus is, I would think, is slightly off the bonds now. So if you're focusing on the bonds and looking for those rallies in the yields and trying to get long dollars, well, you know what? The market seems to be fatigued of that. And they're coming back and just trading the currencies around what's going on in those independent countries. To me, the US dollar is still the strongest pair, but we're getting periodic releases, whether it's the UK, Canada, Australia, New Zealand, where we're getting mixed data there around sort of lockdowns and coming out of lockdowns. And like the UK, right? I'm hearing that there's a massive fuel shortage due to a lack of truck drivers and a shift in the whole demographic of the working community around oil and et cetera. So there's a massive shortage of oil in the UK. Now that's going to cause issues this week. Obviously, I would be expecting, right? You get to piece these things together. If there's a shortage of oil in the UK, that's going to create a bit of a question mark over how the UK sort of deals with that. But you got to think oil's got to rally, right? So that's going to push dollar CAD down lower, or look to trade oil itself, right? Work out what the major focus is, right? And if I shift over here to, say, just the general news page, you're trying to work out what's driving the market. If it's a shortage of oil, then obviously look to trade oil, right? Or dollar CAD or CAD crosses. Obviously CAD yen, the natural oil trade itself. But you want to keep abreast of what's going on, obviously with the German election, as I said. And, you know, the rest of it's a fair bit of geopolitical sort of rubbish, right? So once again, I'll come back to this. Last week of the month, it's a little bit loose. It doesn't mean you don't get clear trading opportunities on the majors or equity indices, but I think the movements will be short-term and periodic, depending on which central banker is speaking and what they're actually talking about, right? So that's some of the key stuff. The risk-on, risk-off pairs, well, you got to wait, probably get that North American equity market open. Let's see what the equities are doing to see how that risk-on's going, risk-off. And the safe havens, well, I tell you what, Swiss isn't moving a lot. It's starting to move a little bit, but dollar yen's taking the edge off, as I said, as those Evergrande contagion fears recede. Right, so all up, if you're asking me for how do I judge the week, I think it's going to be tricky, right? We've got some technical levels, but they're not exactly great. Euro is a standout technically, so is dollar CAD. If I just come back to those charts, I really like these two pairs. They've got good shape. Dollar CAD doesn't make a lot of sense to me. I know oil's rallying, but that's about it. Dollar yen's through the roof, but I've got no major focus there. The dollar index actually is another good instrument to be looking at as well. That's it for me, guys. It's going to be an interesting, challenging one. I would really like to see how that North American session opens up, see how the US equity market feels about everything at the moment. And then we can start to piece together where how to attack the market and where those economic data releases are going to really fit in. Keep an eye on those US durable goods. That's a good historical number to really crank things up for a Monday. All right, guys, all the best. Cheerio.